If you've been counting on that December 2025 Social Security payment increase, there's a critical deadline approaching that could determine whether you actually receive it or not. Right now, thousands of beneficiaries across the country are unknowingly putting their cost of living adjustment at risk because they haven't updated one crucial piece of information with the Social Security Administration. This isn't about the standard COLA announcement you've already heard about. This is about a specific administrative requirement that the SSA doesn't actively remind people about. And missing it could mean the difference between getting your full adjusted payment or being stuck at your current rate well into next year. The window to take action is narrowing, and if you're part of the demographic that needs to complete this step, waiting until December could be too late. What makes this particularly concerning is that the SSA processes these updates on a specific timeline. And if you miss the cutoff, there's no quick fix to get you back on track for that December payment. Let me walk you through exactly what this step is, who needs to take it, and how to make sure you're not leaving money on the table. Let me be completely transparent with you, because this affects real money in your pocket, and I've seen too many people get caught off guard by this exact situation. The Social Security Administration operates on a very specific calendar when it comes to implementing changes to your benefits, and understanding how this timeline works is absolutely essential if you want to make sure you're getting every dollar you're entitled to. What most people don't realize is that even though the cost of living adjustment gets announced in October and is supposed to take effect in January, there are certain circumstances where beneficiaries need to take proactive steps months in advance to ensure that adjustment actually shows up in their payment. This isn't something the SSA sends you a personalized letter about, and it's not something that gets a lot of attention in the mainstream news coverage about Social Security. Everyone talks about what the COA percentage is going to be, but almost nobody talks about the administrative steps that some beneficiaries need to complete to actually receive it on time. Now, before we get into the specific step you need to take, I want you to understand why this matters so much right now in 2025. We're looking at an economic environment where inflation has been impacting everything from your grocery bills to your utility costs. And that Social Security increase isn't just a nice bonus. It's money that many people are genuinely depending on to keep up with rising expenses. Missing out on that adjustment for even a few months can create a real financial hardship, especially if you're on a fixed income and you've already budgeted based on the assumption that your payment would increase in January. The problem is that the Social Security Administration is an enormous bureaucracy that processes benefits for tens of millions of Americans. And when something falls through the cracks in their system, it can take months to get it corrected. That's why taking this step now, before we even get to December, is so critically important. So, what exactly is this step that you might need to take? It all comes down to whether the Social Security Administration has your current and correct information on file for what they call your payment profile. This includes things like your current mailing address, your direct deposit information if you have it set up, and most importantly, your tax withholding elections if you've chosen to have federal taxes taken out of your Social Security payment. Here's where people get tripped up and why this becomes an issue specifically around COA time. When the Social Security Administration processes a cost of living adjustment, they're not just adding a percentage to your current payment and calling it a day. They're actually recalculating your entire benefit amount based on multiple factors. And if there are any discrepancies or missing information in your file, their system can flag your account for manual review. When that happens, your payment doesn't automatically update in January like everyone else's does. Instead, it goes into a queue where an actual person has to look at your file and resolve whatever issue is causing the flag. The most common reason accounts get flagged during COLA processing is because of address discrepancies. If the Social Security Administration has been sending correspondence to an address and those letters have been returned as undeliverable, or if you've moved and updated your address with the post office, but not directly with Social Security, that can create a red flag in their system. They need to verify that they can reach you before they process any changes to your benefit amount. and that includes COA increases. Similarly, if you have direct deposit set up, but the bank account information they have on file is outdated, maybe because you closed an old account and opened a new one, or because your bank merged with another bank and account numbers changed. That's another common issue that can delay your COA adjustment. The SSA needs to confirm they can actually get your payment to you before they'll process the increase. But here's something that catches a lot of people completely off guard, and it's particularly relevant for those of you who have chosen to have federal income tax withheld from your Social Security benefits. When you initially set up tax withholding, you filled out a Form W-4V with the Social Security Administration, and that form tells them what percentage of your benefit to withhold for taxes. The issue is that when your benefit amount increases due to COA, the dollar amount being withheld for taxes also increases proportionally. For some people, especially those who are close to certain income thresholds for tax purposes, that automatic increase in withholding can create problems. What the Social Security Administration recommends, though they don't make it mandatory or send you automatic reminders about it, is that you review your tax withholding election before a COLA adjustment takes effect. If you don't review it and update it if necessary, and if your current withholding creates any kind of issue when they try to process your new benefit amount, your account can get flagged for review, which again means your COLA doesn't kick in on time. There's also another layer to this that affects a specific group of beneficiaries, and if this applies to you, it's absolutely critical that you pay attention. If you're receiving Social Security benefits, but you're also still working, even part-time, the earnings test applies to you if you haven't reached full retirement age yet. The Social Security Administration is supposed to track your earnings and adjust your benefits accordingly throughout the year. But the system isn't perfect. If there's any discrepancy between what they think you're earning and what you've actually earned, or if you haven't reported earnings that you're required to report, that can absolutely hold up your COA adjustment. The SSA needs to make sure they're calculating your benefit correctly, based on your current earnings, before they add the cost of living increase on top of it. If your earnings information isn't current in their system, your COA gets delayed until they can verify everything. Now, I know some of you are thinking, well, I haven't moved, my bank account hasn't changed, I'm not working anymore, so this doesn't apply to me. But here's the thing that's particularly important to understand about how the Social Security Administration's computer systems work. They run verification checks on everyone's account before processing major changes like COLA adjustments. These checks are automated and they're looking for any kind of inconsistency or missing information. Sometimes those flags come up for reasons that seem completely random or technical. Maybe there's a slight variation in how your name is formatted in their system versus how it appears in some other government database they're cross-checking against. Maybe there's an old piece of information from years ago that was never fully cleared out of your file. The point is, you can't always predict whether your account might get flagged, which is why the proactive step of verifying and updating your information now before the COA processing begins is so important. Let me walk you through exactly what you should be doing right now to protect yourself and make sure your December 2025 payment, which will actually be the January 2026 payment that gets deposited in late December, includes your full COA adjustment. The first thing you need to do is log into your My Social Security account online. If you don't have an online account set up yet, this is the perfect time to create one because it gives you direct access to all of your information exactly as the Social Security Administration has it in their system. When you log in, you want to verify several key pieces of information. Check that your mailing address is correct and current. Check that your direct deposit information is accurate and matches your current bank account. If you have tax withholding set up, look at what percentage is being withheld and think about whether that's still appropriate for your situation. If anything needs to be updated, you can make most of these changes directly through your online account, which is much faster than trying to do it by phone or by mailing in forms. If you don't feel comfortable using the online system, or if you're one of the people who prefers to handle things the traditional way, you absolutely can call the Social Security Administration or visit your local Social Security office. But here's what you need to know about those options. The phone lines are notoriously difficult to get through on, especially as we get closer to the end of the year when call volume increases. You might be on hold for an hour or more, and you might have to call multiple times before you actually reach someone. Visiting an office in person can be more reliable, but many offices now require appointments, and depending on where you live, you might be waiting weeks to get an appointment slot. That's why I'm telling you to handle this now in the fall, when there's still time to deal with any complications that might come up. If you wait until December and then discover there's a problem with your account, you're not going to have time to get it fixed before the COLA processing happens. There's another aspect of this that I want to make sure you understand, because it relates to how Social Security payments are actually distributed. Your payment date each month depends on your date of birth, and this is a system that's been in place for years, but still confuses people. If you were born between the 1st and the 10th of the month, your payment comes on the 2nd Wednesday. If you were born between the 11th and the 20th, it comes on the 3rd Wednesday. If you were born between the 21st and the end of the month, it comes on the 4th Wednesday. The exception is if you've been receiving benefits since before May 1997, in which case you get your payment on the 3rd day of the month, regardless of your birth date. Now, why does this matter for COA? Because the timing of when the adjustment actually shows up in your payment can vary by a few days depending on which payment schedule you're on. And if there's any issue with your account, you want to know about it as soon as possible so you can address it before your next payment cycle comes around. Here's something else that's really important to understand about how COA adjustments work and why getting ahead of any potential problems matters so much. When the Social Security Administration announces the COA percentage in October, that's based on inflation data from the 3rd quarter of the year. The adjustment is calculated using something called the Consumer Price Index for urban wage earners and clerical workers, which is a mouthful, but basically it measures how much prices have increased for things like food, housing, transportation, and medical care. Once they calculate that percentage, it gets applied to everyone's benefit amount. But the actual implementation of that increase happens through a massive computer processing run that the SSA does in November and December. This is when they're calculating the new benefit amounts for millions of people, and this is when accounts get flagged if there are any issues. If your account gets flagged during this processing period, and you haven't already taken steps to make sure all your information is correct and current, you're going to be stuck waiting for a manual review while everyone else is already receiving their increased payments. I also want to talk about something that affects people who are receiving Social Security disability insurance, because the rules are slightly different for you, but the underlying principle is the same. Social Security disability insurance beneficiaries do receive cost of living adjustments just like retirement beneficiaries do. But if you're on disability, the Social Security Administration is also monitoring your medical status and whether you're engaging in what they call substantial gainful activity. If there's any question about your continuing eligibility for disability benefits, that can absolutely hold up your COA adjustment until those questions are resolved. If you're on SSDI and you've had any changes in your medical condition, or if you've done any kind of work, even on a trial basis, you need to make sure that information has been properly reported and documented in your file before the COLA processing happens. Otherwise, you could be looking at a significant delay in receiving your increased payment. For those of you who are receiving benefits based on someone else's work record, whether that's as a spouse, surviving spouse, or dependent, there's an additional layer here. The Social Security Administration needs to have correct information not just about you, but about your relationship to the primary beneficiary and about any other benefits you might be receiving. If there are any discrepancies in those records, it can delay your COA adjustment, even if everything about your personal information is correct. This is particularly important for widowers to be aware of because sometimes there are delays in the system updating your status after a spouse passes away. And those delays can create problems months or even years later when other changes are being processed. Let me give you the bottom line here because I want to make sure you walk away from this knowing exactly what you need to do within the next few weeks. You need to verify that the Social Security Administration has your current and correct information on file. That means checking your address, your direct deposit information, your tax withholding, if applicable, and making sure there are no other outstanding issues or questions about your account. The easiest way to do this is through your My Social Security account online. But if you need to call or visit an office, do it now while there's still time to resolve any problems that come up. Don't assume that just because you've been receiving payments without any issues that everything is fine in their system. The COLA processing is when problems surface, and you want to get ahead of those problems, rather than discovering them after the fact when everyone else has already received their increase and you're still waiting.